Hello and welcome to Pro Trader Strategies Market Commentary for Friday, August the 14th. It's the end of the week. My name's Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that all comes in to impact the markets with my market analysis. I do the same thing in these daily market commentaries, but I go a little bit further and talk about option strategies that I'm putting into my portfolio based on those assumptions I come up with on that market analysis. I'm not just picking any option strategy out there. I have some guidelines we need to follow in order to implement an option strategy around any given market assumption. But without further ado, let's get on with the economic data and see how that's impacting the overall markets. Across the pond, really not a whole lot going on, but here in the United States, we actually got some really important economic data. We got core retail sales. Now remember, core retail sales strips out automobiles, and that came in a little bit better than expected at 1.9%, expected to be 1.3%. Also, a revision of last month's number higher by 1 percentage point. So retail sales doing very good. I talked about this yesterday. I believed that that number was going to come out better than what was expected because a lot of people are sitting at home, shopping online, and once we've gotten the opportunity to get out of the house, believe it or not, people were going to the malls. But when you put back in those autos, the number not looking so great, coming in at 1.2%, expected to be 2%. They did revise last month's number up also on that one by a percentage point, but that's not really making up a whole lot of confidence in the automobile sector there. All right, we got preliminary non-farm payroll coming in at 7.3%, which was expected to be 1.5%. So that one is really the wet blanket on the overall market. We got the capacity utilization coming in at 70.6%, in line with expectations. Industrial production, 3%, expected to be 3.1%, a little bit of a revision to last month's number, higher by 0.3% there, so slightly higher on that number. And then University of Michigan consumer sentiment coming in at 72.8, higher than the expected 72. Business inventories in line with expectations at negative 1.1%. We want to see inventories moving. It's not surprising to see those moving with retail sales coming in better than expected there without the automobiles, so the core retail sales. All right, crude oil. Gosh, boring here, right? Crude oil is starting to see the divergence between the 200-day and the 50-day moving average. Not quite there yet, but right around $70 or $42 a barrel is where the sweet spot is for crude oil. Gold futures seeing a little bit of weakness today, off by about $21. Again, I talked about this yesterday and a couple of days in the past. I believe that it's going to stay in the 19 handle and try to migrate back to that 2000. Well, we haven't gotten back up there in a couple of days, but I do believe the market is going to stay above that 1923 area, which is the high from what we saw back at the beginning of the Great Recession. I do think that we're going to see some little bit of kinks in the armor here in gold futures as we've seen the Senate delay any more stimulus and decided to go back to their home states to try and get reelected, for the lack of a better phrase. They are going to possibly come back after Labor Day and talk about this, but there's really nothing on the docket as of right now. Bonds are starting to make a bit of a comeback, half a point higher on the day, holding on to that 178 handle there, albeit barely, but we've talked about this again. Market wants to stay right in and around here. We got some weakness yesterday on a failed auction. We talked about the auction coming out late. Well, there was more sellers than buyers, which causes interest rates to go higher. That means they weren't really accepting those interest rate at that low of a level. They would rather sell it than buy it. So when they sell those bonds, that increases interest rates there. Not a ton, but increasing those rates nonetheless. And something to note, we have had 3 days in a row below the 50-day moving average, which is a little bit of weakness ahead. I think that we're going to hold on to the 177 handle, though. We're a point away from that, but I do believe that the market is going to start migrating back up towards that 180 handle, as that is where the time and volume has been spent. Why has this volume node not moved up yet? I'm not quite sure on that chart. All right, so VIX slightly higher on the day. We have the Dow Jones Industrial Average positive by just about 16 points. Really feels like unchanged for the most part. Same with the NASDAQ, a mixed bag. Although the NASDAQ is showing some weakness here, down about 38 points. And the E-mini S&Ps just slightly positive, but we'll call that unchanged. So that's what I'm talking about with the mixed bag. At any given time, we're seeing some of these equities move into positive territory while the others are in negative territory. Volume very light early on today, and I don't expect it to get any better as the day goes on, because it is a Friday in the summer, and that's usually a rush to the Hamptons is what we used to call it on the floor. And it's not just the Hamptons, but it's just anybody trying to get away for the weekend a little bit early, and that causes those volumes to really get zapped. All right, looking at the E-mini S&Ps on the breakdown of the daily chart. These are 30-minute candles. Overnight section is gray. You can see pretty much some weakness. That could have been due to just some overbought conditions there, but we are really seeing some inside days. We could say that on Wednesday it wasn't necessarily an inside day, but it sure feels like it. And then yesterday, another inside day. Today, weakness on the sell-off there, causing that to kind of break out. But you can see the points of control are really lined up quite nicely almost the entire week, which has caused this market to really kind of condense and start to build up some pent up. It's like the rubber band. When you start winding it up, it's ready to snap. What direction it goes, we're going to have to watch out for. I don't think that we're going to see a major move this Friday like we've seen in a couple of the past Fridays. I think it's going to be relatively subdued for the better part of the day. Now, on to the trades that I'm looking to do. KODK, just not really firing me up here. You guys remember I sold the 12 puts in there. I only have about 7 days to go, so they're in the August 12 puts that are in the money there. I was looking to get that stock put to me, but it's just a really dark cloud over this with how they got their loan from the government and kicked back a bunch of the C-level executives at this company, and then that caused them to lose that loan. Whether or not they can shake all of this out, I don't think that I'm going to be around long enough for that. I was expecting to take KODK in. I sold those 12 puts at $2. My break even is 10, so obviously it is not looking great right now, but I think there's going to be a better opportunity. Oh, there we go. I'm out of the KODK trade there for $3.75 is where I had that order. So I lost $1.20 or $1.75 on that trade, but I am out of KODK officially. All right, so that's all I've got for you guys. You guys heard it here first, and hope you guys have a great weekend. One last thing, take a moment to go over the disclaimer. We are an educational company. I'm not trying to solicit you guys to trade this KODK. Obviously, that wasn't a good trade to trade, but sometimes I stay mechanical with those, and sometimes I just decide to pull the ripcord on KODK. We're pulling the ripcord, or I'm pulling the ripcord on that trade and out. All right, that's all I got for you guys. Have a great weekend, and if you can't take that, take it easy.